Hey guys, Mike here. So happy Friday. The weekend is here. Salute to all my fellow veterans. Thank you for your service. Really appreciate that. Hope you have a great weekend. But boy, getting into the market, and yes, reality is unsuspended now. We're going to get into reality because boy, what another day it was. And it's very unusual to come off a huge day like yesterday and then have another big day, right? Which it did. I mean, I think the NASDAQ this week overall is like 8% up or something like that. Just a crazy move, and that's an index. So some of the stocks like are up 30-40% and stuff. And I mean, you can just see it as we get into. There's a lot to get into, so I'll just get into it. You know, the market makers walked away because the people that bought puts got squished because I'm sure a lot of people thought it was going to sell off today, which it should have, by the way, according to historical records. But this is an unusual market, right? And I know the big question today was like, was that the bottom? I hear people talking, was that the bottom? Right? And then what we always say, is that the bottom? Well, we'll find out. We'll find out. Remember, you don't know if anything's the bottom until months later, but this right here would be an historical one if this was actually the bottom. It'd be the first time, and there's a members video going out tonight. I put usually 2 out a week to show them why it would be historical if that was the case. But again, you're first, never know. But again, reality isn't suspended for this video, so you'll see. You know, ask yourself, go, really? Is that really what's happening? And so we'll see. But the good thing is going to the charts. I mean, a lot of bullish things are happening short term right now for sure. We know. And some things to look out for here. Like a big one is going to be the one that don't get talked about enough, the Russell 2000. Because this is the 200 SMA right here. And you can see it's rejected multiple times off of that as the year goes. And it actually breaks above it, usually one candle. Trades sideways and then rejects back off. Right now we just closed above it today, and so we're going to get to see, are we going to reject back down or not? The Qs, again, it's approaching the 100-day right here. 200 is way up there, and if you look at it, it's just like the S&P, right? It doesn't have much to go to get to the outer area of this descending channel we've been in, and everything's going to meet. The 200 moving average is going to meet with that big, huge gap right there and the golden pocket, and so that's what we're going to be looking at for that. And then you got the S&P, same thing we talked about yesterday. You know, obviously another big move up, and there it is, 200 moving average. It will be there by Monday or Tuesday if we keep going at this rate, but I suspect eventually you have to at least pull back and consolidate a little bit. But again, it's not oversold on the index yet. It can keep going, but the funny thing is we will meet right there at oversold, right there at the edge of that descending channel. So that's going to be something to watch out for. And understand, if you don't hear anything else, we all enjoy run-ups, okay? But I can guarantee the Fed is not enjoying this. And the reason why the Fed is not enjoying this because it's already, a lot of stuff has already been undone what they did, right? Mortgage rates started dropping back down. Treasury yields fell off a cliff, right? And so that's not what they want to see in the dollar. Look what's happening in the dollar. They even came out with a statement in the Treasury knowing that there are countries manipulating and trying to save their currency to push it down. But understand, you know, obviously enjoy this ride, but you need to understand why inflation doesn't go straight down, okay? And it's because when the dollar weakens, what moves up? Commodities, okay? That's a big thing to think about. What do we have here happening right now? And look at the dollar. I mean, it has fallen off a cliff. All right, this is the most weakness we've seen all year long. And look at that weekly candle. Holy cow. That is that, and can you see it? I mean, that is unbelievable, right? I mean, you got to go back to 2020 to see a candle like that when you had that flash crash or 30-day crash, in 2020. And understand, this is what happens. Look what's happening to certain commodities that we use a lot around the world here. Silver, since the dollar has been selling off, is going up. Copper, Dr. Copper, is going up. Look at oil. Oil is going up. And that's definitely the one you do not want to see go up because those three commodities, we use it in pretty much everything you can think of worldwide. Okay, and so if they start to go, which they are right now, and the dollar continues to weaken, we'll have to see, okay, then what do you think is really going to happen to inflation? That's the question, right? That's what you got to ask yourself. And I did come across this today, and this was interesting, right? Think about this in reality. We're still sitting at a very, very high number, 3 times what the Fed wants, and that's what we're celebrating. Did you guys happen to see healthcare costs by any chance? Here's CPI health insurance percentage change month over month. That's interesting. What is that? That was like a crypto coin or something. That was what happened. And there was some kind of adjustment or something that happened And please don't forget to hit that like and subscribe button and share this video, guys. It really helps the channel out. Thank you very much. And so, you know, did your healthcare costs fall off a cliff last month over month like that? I mean, you see the chart. That's definitely something wrong. It's a glitch or some kind of adjustment they did or something when I was reading about it, and I didn't really totally grasp it. But yeah, that doesn't seem normal. And so I can't wait to see what it's at in December, right? Does it come back just to where it was after the adjustment? And so, you know, a few things to get into that, you know, people just got to pay attention to, whether you like it or not, right? Enjoy these rallies. I'm enjoying them. Everybody's enjoying them, and it's fantastic. But again, this channel is grounded in reality, right? In reality. That's the way it is. And so, you know, this is the stuff you got to pay attention to, and I'm going to pay attention to it for you. But understand, you know, this is what they're expecting now. 50 basis points baked in, like 85% is what they're expecting in December. No rate hike in January. February, 25 basis. March, 25 basis points, puts us up to 4.75 to 5. Pause, and then they're saying rate cuts are going to happen in November 2023 and continuing in 2024. And something else the Fed is not going to like to see is wages. They ticked up again. They were coming down, and they ticked back up last month, okay? And you see just how historically how this is what they're fighting. And so again, I can't wait to see December's report, which is why maybe you see what the market's doing. They're just rallying like crazy right now, which is great. But, you know, the other thing you got to look at, and if you're not from America or you're new to America, or whatever, you're watching this from another country, you know, you're seeing a lot of headlines I'm going to show you, but there is something that this country is founded on and maintains that you have to understand. So if you're wondering, like, well, how come things are holding up as good as they are at this point in time, right? You figure it was going to fall off a cliff completely, but how come it's holding up as good as it is? And basically, here's what you're seeing. All right, you got all these publicly traded companies. This all came out like this week. Redfin shutting down its home flipping business, laying off 13% of its staff. You're going to have, Opendoor, 18% of its staff. They put this out last week, actually, but I figured real estate's falling off a cliff, so I put it in there. Salesforce this week, of course, laying off hundreds of sales workers. And then you're going to have Disney, just came out today. They're going to be doing hiring freezes and job cuts because their earnings were not good. And the reason why that's important is because right here, this is the latest data I could find, which is kind of surprising, by the way. But this is the excess U.S. household savings, basically by quartiles, or however you pronounce that. And you can see the surprising part is I'm not surprised about the bottom right here getting squeezed and having to use their savings. We talked about that. They're the ones really feeling like it's a recession. It's actually the top quartile, which actually shocked me. Like, you see how much it decreased? Because the second layer, not a whole lot of decrease. The third layer, some kind of decrease. But the top, yeah, I guess they really went through their savings. A lot more, even though you see how much it increased. By the way, that's why they call it the big wealth shift in history. It wasn't because it came to regular folks, because it went to rich folks when all that free money was put out in the market. But here's the key, guys. In this country, small business is what drives the economy. This just came out this year, about 6 months ago. And the only thing you really need to understand about this right here are these numbers right here. According to the association, small businesses of 500 employees or fewer make up 99.9% of all U.S. businesses and 99.7% of firms with paid employees. Of the new jobs created between 1995 and 2020, small businesses accounted for 62%, 12.7 million, compared to 7.9 million by large enterprises. A 2019 SBA report found that small businesses accounted for 44% of all U.S. activity. And then more importantly, what's happening now? 63% of small businesses have stopped hiring and 10% started layoffs. This was about 6 weeks ago that they put this out right here. And the important thing to take away from this is in July when they did this, 45% of small businesses stopped hiring new staff and 4% reported layoffs. So that's going up to 63% and 10% now. And that's why you're seeing this number right here, which is Employment Trends Index, which came out yesterday, approaching recession territory. All right. And so it's closed. The line right there is where you'll see most recessions. You can see we go into a recession. We won't know we're in it, but we are. And we're pretty dang close to that line right there. So we got a little ways to go. And so that's something important to watch, of course. But understand these big companies, one reason, the main reason they're doing, I showed you the other day, was they're trying to get their earnings back up, right? And also understand that the small pennies, I mean, I hate to see those people get laid off, but the number is so small compared to the overall workforce. The unemployment rate is not even going to really feel that right now. But what you're looking at is if their 2019 levels were here, and all of a sudden all this growth happened because it was free money, well, they need to get from, so now the hiring levels up here, well, they need to get it back down into the mean, right? It's like a stock comes back down to the mean. They need to get the number of employees they have back down to that as well. And so that's what they're trying to do. And just make sure that you get the earnings up. That's how you do it. That's why you see those stocks rallying like crazy. As soon as they announce layoffs, see you later. Most of them just start taking off, right? Because that's all, remember, that's Wall Street. They don't care about the economy part. They just care about you beating those numbers any which way you can, okay? And so understand also the reason why the economy keeps holding up and didn't fall off a cliff, because if you've worked for small businesses or family-owned businesses, which I've worked for a few, they usually, the last thing they'll do is layoffs, right? They try to hold on to you. They'll do wage cuts. Like the bigger companies, what are they doing? They're cutting back hours right now. And plus small companies do the same thing. They'll cut back your hours, but try their best to hold on to you. But small companies try a whole lot more than the big ones because they're not publicly traded. They don't have a board to report to, shareholders, none of that, okay? And so usually they're the last to go, right? The big ones will start it and then eventually go to the small ones. So we'll see, where it's at and everything. But that's what's really happening. This rally, great, loving and seeing the green, all good. It'd be nice to see some kind of pullback Monday to try to consolidate a little bit here. A lot of these stocks are starting to get up into oversold territory after 2 huge days like this, which obviously is very, very abnormal. And of course, options expire today, so I didn't look at what max paying was. But next week, I believe it's monthly options. I think is it the third Friday? I might be mistaken, but I'll have to go check on that. So it'll be an interesting week next week. Let me know what you think is going to happen Monday or Tuesday. You think we're going up or down? And so hope you guys have a great weekend. Salute to the veterans again, and I'll see you Sunday.